Hello and welcome. The lesson that we're going to be covering today is 3-1, recording transactions in the general journal. The objectives for the lesson would be to define what a journal is and explain why it's used to record transactions, to compare and contrast different types of source documents, and to identify the 4 parts of a journal entry. First of all, journals are a form that you use to record transactions in chronological order, which basically means you're putting them in date order. Recording transactions in a journal is called journalizing, and we'll use writing in your journal and journalizing synonymously. So first of all, when you're looking at your journal and preparing it, you'll see up at the top it says General Journal, and there are some headings in the journal. You want to make sure when you enter the information in that you follow and write the information in the correct location. Very important. So first of all, you need to be accurate whenever you journal. Its accuracy is so important in accounting and it cannot be overlooked. Second, it's a chronological record, which means in date order, you will record your transactions as they happen. Finally, you really need to be aware of the idea that accounting follows a double entry system. Information for each transaction that's recorded in the journal is called an entry, and recording both the debit and credit sides or credit parts of the transaction is called double entry. You have a debit and a credit for each transaction. Now, source documents, these are the business paperwork that we use to obtain information for our journal entries. Source documents basically prove the activities of the business. We know something took place because we are able to find the information on some kind of source document. Checks are a source document. And a check is just a business form that orders the bank to pay cash from a bank account to a provider. In the example we're looking at, Delgado Web Services is issuing a payment to East Side Supplies for $165. You can see over on the left is the receipt part of the check that indicates the amount of that is in the account, the $2,000. And then we're subtracting the $165 so that you can see the balance in the checking account according to the check register, and then you also see the actual check as it's written on January 2nd. An invoice is a form that describes goods or services sold. It also includes information on the quantity, the price, the terms of the sale. So that would be an invoice. An invoice is how we are billed for services when we are going to be paying after the fact. Sales invoices are sometimes referred to as a sales ticket or a sales slip. And a sales invoice indicates that there's a sale on account and that the money will be following after. A receipt is the business form that is our written acknowledgement that cash has been received. So you can look at a receipt and you can determine, I received this cash, and now I'm providing a receipt to someone for receipt of cash. Memos, sometimes referred to as memorandum, these are brief messages that are written to describe transactions. A calculator tape is exactly what it sounds like. When you run a calculator tape off of an adding machine, then we have a record of individual transactions that total up to a certain amount. And you'll see why we might use a calculator tape later. So let's go ahead and look at a transaction that we would like to write in our general journal. So you can see the transaction would be receiving cash from the owner as an investment, and we will be following the information on receipt number 1. So cash is going up, and capital for the owner is going up. So you can see we have a debit to cash and a credit to owner's equity. When we are looking at our general journal, first of all, the transaction happened on January 2nd. you can see that we are writing in cash on the first line because that is the debit transaction. Document number, we have R1 as that's our receipt 1 in the amount of $2,000. On the second line, where we are writing Michael Delgado's name for the credit entry, we want to make sure that we always indent a little bit of space under the debit entry on the top line. Okay? So you can see the debit, and then you can see the credit, and we've indented that for the same amount, and now we have a double entry in our general journal. We look at a second entry, paid cash for supplies, $165, and that was check 1 on our source documents. We are going to be paying cash for supplies, so our supply account is increasing, so we're going to be debiting supplies, and our cash account is decreasing, so we're going to be issuing a credit on our cash account. In our general journal, and you can see that little white space, that's where we have moved our journal up so we can see our second entry. Our date was also on January 2nd. So we wrote the date in. The title of the account to be debited is supplies. The title of the account to be credited is cash, and we remembered to indent on our credit transaction for the same $165. And then the source document that we would be referring to is C1 for check 1. So if we wanted to audit our understanding, first of all, what order are transactions recorded in a journal? Why are source documents important? And listing the 4 parts of a journal entry. Now that you've watched the video, you can go ahead and complete the answers in the 3-1 check-in for understanding, and then you can move on to the work together and on your own activities.